Hi, welcome to Chapter 9, Business and Finance, Section 7 onwards. So just a relatively short section then, just to finish off the chapter. So we're just going to have a look over accounting principles that I would imagine you've seen before. So hopefully just a brief revision of those. We'll have a quick chat about accounting standards, and then the final part just to think about what the roles of the professional accountant are. So nice and short, but just a nice one to wrap up the chapter with. Okay, so we spoke about the importance of the accounting profession in the first recording for Chapter 9, which covered sections 1 to 3. And then in the last recording, we started to think about the different work the accountancy profession does, and one of which was financial reporting. So making sure that we're providing high quality financial reporting to our external stakeholders. That aspect of the accountancy profession then was driven by professional principles and accounting principles, and in the last recording we looked over some of those professional principles, namely the ICAEW Code of Ethics. So we're going to pick up now with the accounting principles. So again, this is a key ingredient in making sure that we're providing really good financial reporting. So apologies if you've seen these before, but it's never a problem to recap something that you've seen before, just in case. So first accounting principle that we're going to deal with is the accrual basis. So this just says that we should recognize transactions and events when they occur, and not just when cash is received or paid. So for example, we might buy some supplies that we're going to use say in November, and the invoice doesn't arrive until December. So we need to make sure we're recognizing that purchase in November when we've actually utilized the supplies, and not just when we have to actually pay for the goods. Okay, going concern. Going concern states that financial statements are prepared on the assumption that the business is going to continue for the foreseeable future. Now we'll often use 1 year as the kind of barometer for that, or the crossover point for that. So for example, if you were performing an external audit and you were trying to decide whether you thought that the management's going concern assumption was reasonable, you'd need to see how they presented the accounts, and if they presented the statements as a going concern, you'd need to comfort yourself with the fact that the business will continue for more than a year. So those are the two kind of key principles that we work with. Double entry bookkeeping then is just saying that every transaction has a dual effect, so every transaction has a debit and a credit. So for example, if you were paying some sort of wage expense, if you're paying wages to your staff, you might have a wage expense account. You might have your bank account if you're paying in cash, say, and you would debit your wage expense account and you would credit the bank. So a dual effect. Okay, faithful representation, which is all to do with accuracy and completeness of information. So we need to make sure that our financial information is represented faithfully, and this just means that, for example, the financial statement should accurately reflect the actual condition of the business. And also making sure that it's materially complete, so that everything included, is going to be useful. Substance over form then is saying that we should, when treating transactions, we should make sure that we treat them in terms of their substance and not just their legal form. So the best example here would be to do with leases. So we'll see two different types of lease, and how you treat a lease depends on whether or not you've transferred the risks and rewards of ownership. So if we think about risks and rewards, so it depends whether the risks and rewards are still with the lessee or the lessor. Okay, and whether those risks and rewards have been transferred or not will dictate how we treat that transaction then within our financial statement. So it's all about substance rather than just legal form. Okay, materiality is just referring to a transaction or a balance whose omission or misstatement could influence users. So for example, when you're looking at external audit again, you look for material misstatements. So you're only really concerned with things that are well, often large enough, but the nature is important too, in terms of affecting the economic decisions of whoever's going to use that information. Okay, neutrality, just making sure that information is free from bias. So when we're performing that financial reporting, making sure that that report is free from bias. Prudence just refers to a degree of caution, so making sure that we're not being overly optimistic. Okay, timeliness is obviously referring to delays in providing information, and we just have to make sure we have a balance then between making sure that we get information on time so that it's still relevant, but making sure that we're not reporting too quickly without kind of due care and attention, so we're going to be less reliable in terms of what we've actually reported. Cost versus benefit, just making sure that the benefit derived from the information is going to be more than the cost of providing it, otherwise it's not useful information. Consistency, making sure that we are consistent with how we present and classify financial transactions so that we can compare one period to the next. And then finally, offsetting. So accounting principles state that we should make sure we report, for example, assets and liabilities or income and expense separately and not just reporting net figures. Okay, so those are the accounting principles that you need to have an awareness of for BF. Like I said, you will have seen these at another course, I'm sure by now. Section 8 then just discusses accounting standards. So accounting standards are just making sure that everybody knows what the correct practice is in terms of the treatment of transactions and balances and so on. So making sure that everybody knows, both the users and the providers of information, how things have been treated and that they've been treated correctly. Now there are two different types generally of accounting standards. So we've got international standards and we've got UK standards too, or national standards in our case, obviously UK standards. International standards, then we've got IAS and we've got IFRS, and then in the UK we've got SAPS and we've got FRS, which are presented or produced by the ASB. So just have an awareness that there are those two types. So obviously there will be a national standard and then the international standards. And then finally for chapter 9, we've just got a bit of a breakdown between the different roles that the professional accountant can carry out. And obviously we've had a bit of a look at this already on this course, and you yourselves will have lots of experience of this, whether it's yourself, whether it's through people you know in different roles. So we're going to split it between working in practice and working in a business. So this table just gives us a breakdown of the different jobs that you can see, or the different skills or roles that you can see within the accounting profession. So as I said, chapter 9, relatively straightforward. Lots of little bits and pieces that you might need to just make sure you've looked over. The chapter questions, or the question bank questions on chapter 9, will give you a good indication of the level of detail required for the exam, but it's nothing too complicated. Very much a learn and churn chapter. Okay, next up then in chapter 10 we'll start thinking about regulation, so we'll pick back up then.